Hello traders, and welcome back to another episode of Smart Risk. Identifying strong and weak structural points on the price chart is crucial because it helps traders gain additional information about price movement, providing insights into the price's upcoming and future moves. In today's episode, we will dive deep into recognizing these points in the market that provide valuable information about price behavior, such as the price's general direction, allowing traders to determine whether the market is trending upward, downward, or sideways. Additionally, these points may indicate potential reversals in the market. They can be used to decide about entering or exiting trades, setting stop-loss orders, and identifying potential price targets. So traders, if that's something you're interested in, please give this video a thumbs up to show your support and subscribe to our channel if you are new. See you after intro. Welcome back, traders. So, let's get started. Recognizing strong and weak structural points is essential for market structure mapping, identifying supply and demand levels, anticipating price reversals, managing risk, and determining entry and exit points in trading. Now let's see how structural strong and weak points can be identified in the market. Imagine that we have a structure like this. Now, let's identify the strong and weak structural points in this bullish scenario. Starting with the strong points. If the price breaks a structure to the upside, it creates a strong low. In this example, we see that the price is in an uptrend and has created multiple breaks of structures to the upside. Here, we see that the price formed a break of structure and also created this strong low over here. Moving a bit higher, we notice that the price has created another break of structure here, forming another strong low. Now, let's move on to the weak structural points inside this bullish structure. If the price couldn't break below the most recent strong low, it will create a weak high. So if we look at this structure here, we see that we have a strong low at the extreme since the price broke the upper structure to the upside here. After the break of structure and the formation of the strong low, the price retraced back down and started a pullback. As you can see, the price couldn't break below this strong low point and already created a weak structural point called the weak high here. And as soon as this weak high point is broken, a new strong low will be created in the market. Let's say we have a strong low here. As you can see, the price couldn't break it to the downside, and after showing a pullback, it pushed to the upside. This means this high represents a weak structural point. Let's move on to the bearish scenario. Let's imagine we have a bearish structure like this. So what are the strong and weak structural points inside this structure that need to be recognized? In the bearish scenario, if the price breaks a structure to the downside, it creates a strong structural high point. In this example, we see that the price is in a downtrend and has created a series of lower lows and lower highs. Let's say that we have a strong high at the extreme. As you can see, the price couldn't break it to the upside, and after a retracement, it pushed to the downside and created this weak low point. Also, remember that as soon as a weak low is broken, a new strong high will be created in the market. Subsequently, we see that the price broke this weak structural low to the downside and also created a strong high over here. Continuing, we see that it pushed lower, and after creating a pullback, it couldn't break above the most recent strong high point, and also created a weak low point right here. Continuing further, we see that the price pushed to the downside and formed another break of structure to the downside, which means it creates a strong structural high here. Now let's get into the candlestick chart and see an example. Here we have the Euro-Dollar 4-hour chart on the screen. As you can see, the price is in an uptrend and has created a series of higher highs and higher lows. Now let's see where the weak and strong structural points are located. So here we have this low, which is the lowest point of this price action, so let's consider it as a strong low, which we start our analysis based on. Continuing, we see that the price pushed to the upside with this rally upward movement, and then the price created a pullback and couldn't break the last strong low, so we consider this high as our weak structural high. Subsequently, we see that the price pushed to the upside and broke above the recent weak high, so we have a strong low right here. As we mentioned before, when a weak high is broken, a new strong low will be created in the market. Now, let's continue. Once again, we see that the price couldn't push below the last strong low, and after forming this tiny pullback, it pushed to the upside, so we consider this high as a weak high. Continuing, if we look a bit higher, we notice that the price has created another break of structure by breaking and closing above the recent weak high, So the price created a strong low here after forming the bullish BOS. In the following, we see that the price pushed to the upside and has entered into a temporary pausing phase, and also created this high. But we cannot consider this high as a structural point because the price is in a sideways phase and still does not break any structural point like a strong low or weak high. Now let's move on to the next part and see what happens if the price breaks the strong structural points in the market. But before we continue, if you're curious about how we stay updated on financial news and fundamental analysis, well, we rely on Fastbull, one of the best trading websites with various useful trading tools. This site provides one of the most accurate and detailed economic calendar, a tool we use every day before starting our technical analysis. 24/7 economic live streaming also allows us to stay informed about the latest trading world's news and fundamental analysis. So if you want to benefit from multiple trading tools that can significantly improve your trading, make sure to check the link in the description. In the bullish scenario, as you can see, the price created this most recent high here, and then pushed to the downside, and already broke out of the last strong structural low to the downside. So this high is a powerful point that had enough power to break the most recent strong low. The price, by going through the last strong low, creates an opposite side zone, in this case, a supply zone which is located at the extreme. As the strong low has been broken by the price, then the price creates a strong high automatically, which in this case refers to this high. The same concepts apply to the bearish scenario. For example, if the price breaks through the most recent strong high, it automatically creates a strong low and also a new demand area, as the price always creates opposite side zones when it breaks the strong structural points in the market. Now, let's examine an advanced price chart example. In this example, we see that the price is in an uptrend and has also created a series of higher highs and higher lows. We identify a strong low right here, as the price has broken out from this weak structural high. Upon closer inspection of this example, we notice that this strong low is the only strong structural point on the chart. After the creation of the strong high, the price retraced back down but couldn't break below the strong high, so we consider this high as a weak structural high. Subsequently, the price started to continue in its primary direction and attempted to break above this weak high, but was unsuccessful, indicating that this internal low is a weak structural point. Continuing, we see that the price pushed to the downside and broke below the last weak low point, subsequently creating a weak high here. We have two possible scenarios here. In the first scenario, we see that the price is inside the range of this weak high and this strong structural low. As soon as the price goes through the extreme weak high point, a strong low will be formed right here. Thus, this low point, breaking through the extreme weak high, represents a strong structural low. In the second scenario, if the price breaks through the last strong low point, this weak high turns into a strong structural high point. Now let's examine another structure to solidify what we've learned up to this part of the episode. Starting from the left, we have a strong low here because, as you can see, the price broke above this weak high and created a bullish break of structure to the upside. This high is a strong structural point because it broke below the last strong low, so it should be considered a strong high. Moving to the next, this low is weak because the price couldn't break the last strong high to the upside. Again, we have another weak point here, as the price couldn't break any structure to the downside. This low also is a weak point because it couldn't break the last strong high to the upside. Next, we have this strong high here because it broke out two successive structures to the downside, so we have a really strong structural high. Next, we have this weak low here because it couldn't break the last strong high to the upside. In the end, we have this strong high point here because it broke out the last weak low to the downside and created a bearish BOS. We've seen multiple examples, and now it's time to proceed to a real chart and put together what we've learned from this episode. Let's examine a real chart example. Here we have the Euro-Dollar 4-hour chart on the screen. As you can see, the price was in a strong uptrend and created a series of higher highs and higher lows until it changed its direction to the downside. Starting from the bottom left. As you can see, the price has created a bullish break of structure to the upside with this large, inefficient red candle. So this means the price broke out of the last structural weak high, which was this one. So we have a strong low point right here. In the following, we see that the price entered into a short pullback phase and couldn't break the last strong structural low point. So this means this high should be considered a weak point. Continuing, we see that the price pushed to the upside and broke above the last week high and created a bullish break of structure, so we have a new strong low right here. Again, we see that the price formed another pullback, but didn't have enough power to break the recent strong low, so we have another weak high here. Once again, we see that the price created another break of structure to the upside and also broke through the last week high, so here we have another strong structural low. As you can see, after breaking the last week high, the price retraced back down but couldn't break the last strong high, so it created a new weak high. Subsequently, the price pushed upside and created a new break of structure, and also a new strong high over here, which is the last strong low in the bullish market. Continuing, we see that the price subsided its bullish momentum and eventually changed its direction to the downside. Next, we see that the price pushed to the downside and also broke below the most recent structural low point, so this means an opposite strong high has been created at the extreme. Subsequently, the price retraced back up but couldn't break above the last strong high, so we have a weak low point, which is here. Next, we see that the price pushed to the downside and broke below the last week low, so we have a strong high right here. Continuing, we see that the price created a pullback to the upside, but it didn't have enough momentum to break the last strong high, so this low represents a weak structural point. In the following, we can identify another bearish break of structure, since price broke below the last week low, so this means a strong high has been created, which is here. This way, we can identify all of the weak and strong structural points in the market. That's it, traders. Thank you for watching this video. I hope you found it informative and useful. Don't forget to hit the subscribe button and turn on notifications to stay updated on our latest videos. We value your feedback and suggestions, so please leave your comments below and let us know what topics you'd like us to cover in our future videos. We appreciate your support and look forward to seeing you in the next episode.